We believe this hostile bid is just a publicity stunt committed by Green Growth Management and has no chance of succeeding. Well, before we get started, I would like to ask you guys to please give me a like. It really helps my channel and it will push me to make more videos. So let's try to get this video to 100 likes. What's going on, guys? It's Investing Hustler here, and today I'm going to update you with what's going on with Aphria and that green growth hostile buyout. So I did make a video last night stating that today Aphria shares would blow up. After hours, they're up over 20% at one point, and by the end of the by the time I finished recording that video, they were up 18% after hours. Right now, we're currently looking at Aphria and Canadian prices. They're up 10.9%. So they're currently sitting at $8.40. They did reach a high of $8.68 this morning, and this is Canadian dollars. So technical analysis, Aphria is a buy in the oscillators, a sell, and a sell in the moving averages. If the 1 minute is a buy, 5 minutes is sell, buy, and a strong buy. So Aphria is kind of looking like a buy, but I'm going to get more into details into Aphria. There's a pretty interesting article that talks about how green growth hostile bid on Aphria is simply a publicity stunt. I found that pretty interesting, and it could be true. I'm not the only person that thinks this was a very bad deal for Aphria. There was also Aphria's response. I'll get into that. So right now, Aphria is sitting with a market cap of 1.89 billion, PE ratio of 40.9, and 232 million outstanding shares. I did have a sell order of $9, and as you can see here, it did not reach $9. So I did not sell any Aphria shares yet. I do think it was a good move because from the looks of it, Aphria rejected the deal. So this might potentially bring up better deals in the future. This might have been a publicity stunt to bring up the share price, which it worked. It brought it up 10% this morning. So let's get into the first article. Aphria gained 10% early this morning on the Takeover news. So yes, Aphria stock surged almost 10% to 8.3 to $8.30 Canadian in the early morning hours of 10:30 a.m. The positive sentiment towards Aphria comes from the possibility of a takeover from Green Growth Brands, the business name of Santic Biopharma, at a price of 11 Canadian dollars. Investors seem enthused about the possibility, even more so because the decision that rests with the investors to sell their shares directly to Green Growth and exit Aphria at a premium to the current price levels. There's still an uncertainty whether this takeover will follow through. C valued at 2.1 billion, Aphria isn't worthless anymore. So right here it says the positive sentiment towards Aphria comes from the possibility of takeover from Green Growth Brands at $11 Canadian dollars. And investors seem enthused about the possibility, even more so because the decision rests with the investors to sell their shares directly to Green Growth and exit Aphria at a premium to the current price levels. So if this deal goes through, investors will have the option to sell at $11 a share to Green Growth. Valued at 2.1 billion, Aphria isn't worthless anymore. So on December 27th, Green Growth Brand, the business name of Santic Biopharma, announced its bid to take over Aphria for 11 Canadian dollars per share. This represents a premium roughly 45% over its closing price of $7.60 Canadian dollars per share on December 27th. So 2.1 billion isn't worthless anymore because if you do remember, not too long ago, I made a video of when Aphria crashed and the shorters valued Aphria at $0 a share. So that just pretty much makes that whole short attack irrelevant because there's no way Aphria is worth $0 per share because last time I checked, their South American investment is not even worth 10% of what their business is. Aphria's business is mostly in Canada, so that company cannot be worth $0 per share. As you can see right here, a company is willing to buy out Aphria for $2.1 billion. So this announcement comes on the heels of a highly critical report from Quintessential's Capital Management earlier this month, which called Aphria worthless. Literally what I was just talking about. In a deal valued at $2.8 billion Canadian, 2.1 American, Aphria does not look worthless anymore. We also saw that Citron Research was positive about the company with $10 Canadian per share price target when everyone was selling off on Quintessential remarks on Aphria. And I remember when Aphria did crash, I was buying. I bought at $6.50. I bought at $5.50. I've been buying on that decline because I felt like that was a very good opportunity to pick up a company that at one point was worth $20 a share. So
For $5.50 a share for Aphria, that was a steal, and I'm sure glad I picked up those shares. Let's move on to the next article, which is Green Growth's hostile bid on Aphria is simply a publicity stunt. So this is very interesting. It also could be true. And so let's just read the summary real quick. U.S. single state operator Green Growth announced a hostile bid for beleaguered, I don't know if I said that right, Canadian cannabis company Aphria. Based on Green Growth's Thursday closing share price of $4.98, its offer is worth $7.83, which means a 3.4 premium over Aphria's closing price. Using Green Growth's 10-day and 20-day VWAP VWAP, its offer would actually have a negative premium of 20% and 26% to Aphria's closing price. Green Growth is the most overvalued U.S. cannabis stock we've covered, and its stock has miraculously risen 50% between December 14th and 27. We believe this hostile bid is just a publicity stunt committed by Green Growth management and has no chance of succeeding. There was a success in this publicity stunt, and that is Aphria shares are up 10%. And I'm not complaining. I'm an Aphria shareholder. I'm an Aphria shareholder, so I am not complaining. People can continue to give Aphria shitty offers as long as it keeps bringing the price up. I'll be happy. So after the market closed on Thursday, U.S. cannabis operator Green Growth Brand launched a hostile takeover bid for beleaguered Canadian cannabis company Aphria. Based on the available information, our preliminary conclusion is that Green Growth's bid is highly misleading and opportunistic in nature. The bid is very unlikely to succeed, and we think Green Growth is simply trying to copy the playbook used by Aurora when it acquired CanAmed in a hostile turn-friendly deal. Management and owners of the Green Growth most likely know that this bid is unlikely to succeed, but are trying to use this bid to increase its profile and hopefully obtain a higher valuation for its already overvalued stock. We do not like this deal and do not believe that this bid will succeed. However, we think the bid will temporarily create volatility for both stocks, and Green Growth might benefit from more attention. Similarly to the miraculous uprise of Aurora after its CanAmed bid. However, we would not recommend Green Growth shares due to its... Oh man, people are gonna start commenting, turn your phones off. However, we would not recommend Green Growth shares due to its extremely overvalued barbarian approach to M&A from this. So Aurora did do this with CanAmed. I actually remember this. At one point, Aurora was trying to do a hostile takeover over CanAmed, which did turn friendly, and Aurora did end up partnering or owning CanAmed. And it does seem like Green Growth is taking a page out of Aurora's playbook, which in a way is smart. So let's take a look at Green Growth real quick. So they're currently valued at $3.90. They have a market cap of $667 billion, with 14 million outstanding shares. And according to the oscillators right now, they are, according to the technical analysis summary right now, they are a strong buy. The oscillators say they're a sell. Price to book is a 50. Price to revenue ratio 428. Oh yeah, so the price to revenue ratio is 428.5. Price to book is 50. From the looks of it, I don't know much about this company, but it does seem overvalued. It did make a very nice run in the past. Really turns me off is that price to revenue of 428, and then we can compare that to a company like Aurora. What's their price to revenue? See, Aurora's price to revenue is 88. Let's look at Aphria. Aphria's price to revenue is 42. So that says a lot on its own. For a price to revenue that is, let's get that again, 428. When you compare that to Aphria and Aurora, they're Canadian pot companies. This is an American pot company. So it's not really a fair comparison, especially since Aurora has been around a lot longer than Green Growth has. But even comparing it to other companies, like look at this one, price to revenue 0.53. This is just way overvalued. I don't think I can find another company that's even close to that high of a number. So let's go back to the article, page 2. the made up $7 share price. After the market closed, Green Growth, formal name is Santec Biopharma, announced its hostile bid of Aphria with the following details. All stock hostile deal. Each Aphria share will receive 1.57 shares of Green Growth. Based on Green Growth's Thursday closing share price of $4.98 on the CSE, the offer represents a value of $7.83, which implies only to 3.4% premium over Aphria's closing share price of $7.57. Green Growth used the made-up value of $7 for its shares and calculated a 45.5 premium base for this entirely fictitious share price. The press release is highly misleading because the $7 quoted by Green Growth for its own shares is entirely based on internal conjecture. Green Growth expects to complete a concurrent brokered financing of $300 million at a price per share of $7 to both illustrate the confidence and value of considerate under the offer and to fund the business growth to combined entity. Green Growth expects that certain of its existing shareholders will commit to backstop this $300 million financing concurrently with execution of a business combination agreement with Aphria. Basically, Green Growth is saying that shareholders believe that its stock should be worth $7 per share, despite the market only giving it a valuation of $4.98 per share. Now that's after a mysterious 50% run in the last 2 weeks. $300 million financing referenced in the press release is not completed, and certain existing shareholders have not committed to such a transaction. There is no evidence to suggest that investors are actually willing to acquire 300 million shares at $7 per share. In any case, the financing is highly irrelevant to the hostile bid, as the consideration being offered is 100% stock, and none of the 300 million will be paid to Aphria shareholders. The biggest fallacy in Green Growth's bid is that it ignored the market prices of its stock and the fact that its stock had a 50% sudden run up in the past month to claim that Green Growth's own shareholders believe its shares are worth $7 beyond its unreasonable, is beyond unreasonable and almost amusing. So they're really taking a shot at Green Growth, and I don't blame them. I'm actually very interested because Green Growth does seem to be one of those very suspicious companies right now. The fact that they're valuing their shares at $7 after a 50% run up, and they're only valued at $3.90 right now, or something like that. So the bid likely implies negative premium. Let's see the conclusion. So Green Growth began trading on the CSE on November 13th and ended the day at $3.05. That day, without obvious catalyst, the stock miraculously rose 50% to close at a $4.98 Canadian on Thursday before it announced its hostile takeover bid for Aphria. We believe that the bid has near zero chance of success, and Green Growth is likely just trying to grab investors' attention and inflate share price. Green Growth is a single state operator with a single store operating in Nevada currently. Its stock is extremely overvalued, and in fact, it is the most expensive U.S. cannabis stock among our coverage universe. Green Growth Offer's announcement came across as highly misleading by quoting the offer price of premiums based on made-up internal valuations of $7 when its share actually closed at $3.98 the same day. Using the market price, the offer only represents a value of $7.83 and mere 3% premium over Aphria's closing price. Using 10 to 20 day VWAP, the offer implies a negative premium 20 to 26% discount. So I already read that. If you guys do decide to invest into Green Growth, do it with extreme caution. I definitely will not be investing into Green Growth, but I will be looking more into them because this is a very interesting company. I always like to find these companies that are that are up to no good because they're very interesting to talk about, and that's what Green Growth seems to be. I feel like that 50% run in the past month could easily be insider trading. We don't know yet. I know next to nothing about this company, and this is like, I've heard about them before, but this is the first time I'm really reading into them. So yeah, if you guys have any information on Green Growth, leave it in the comment section. Let me know. I would love to learn more about this company. If you guys know about them, know something I don't know, want to mention something I forgot, let me know in the section. Also, don't forget to leave me a like, guys. I always appreciate those likes. Let's move on to the next article. Aphria says Green Growth's $2.1 billion hostile bid significantly undervalues the company. And yes, I'm glad Aphria responded like that. And I think this will bring Aphria's share price up even more. The fact that they rejected this, the fact that they're planning to reject this offer, and as we talk right now, Aphria is now at $11.62. Let's take a look at Aphria today. I'm gonna look at their 1 minute candles. So yeah, Aphria does seem to be making a nice little run. They are currently sitting at $8.45 Canadian. $8.44 Canadian, up 11.5%. And if they do reject this offer, I feel like that just leaves more room for better and more legitimate offers. But who knows? At any point, it could decline because that people are going to start to realize this was a publicity stunt, but we'll see right now. So Aphria says Green Growth's $2.1 billion hostile bid significantly undervalues the company. Canadian cannabis company Aphria up 11.8%. Aphria up 11, so I guess that's the American 11.23% Friday. Said the unsolicited bid made late Thursday by Green Growth's brand significantly undervalues the company. While we appreciate GGB's interest in the value we have created at Aphria and our significant growth prospects, their proposal falls short of rewarding our shareholders for participating in such a transaction. Aphria chairman Irwin Simmons said in a statement, further, the proposed offer is quite risky given GGB's condition to complete a brokered financing at a price that is more than double the recent average of their share price. As a key term to the proposal, Green Growth, which is backed by the Scottstein family, owner of sprawling retail empire, said its bid undervalues Aphria at $11 a share. A full deal price of $2.1 billion. Green Growth's pitch is based on combining the Scottstein's family's long experience in retail business with Aphria's ability to grow lots of pot. Simmons said that the Aphria's board has set up an independent committee to assess the deal, comprised of directors with no links to its passive investment in Green Acres Capital Funds II, which has invested in Green Growth. Aphria shares went up 17% pre-market, but are down 60% in 2018, while the S&P 500 is up 0.2%, has fallen 7%. Thank you, Aphria. That was a very good response. I just find it funny that they respond so quickly to this, but they're just taking their sweet time to respond to those allegations. But anyways, what do you guys think about this whole Green Growth hostile buyout, about Aphria's response? Honestly, I think this was good. I'm not complaining. Aphria shares went up 11% today. So this was a good day for me. My share prices went up. Unfortunately, I did not sell because I was hoping to sell at $9, and it reached a high point of $8.69. So I was 30 cents short of my $9. I did not sell any shares today, unfortunately. Hopefully, the one thing I see a problem here is we did have a nice gap here. So you know what I say, sometimes when you see a nice gap in the charts, what happens is we have a decline to close that gap. So what I'm hoping doesn't happen is Aphria starts to decline back to the sevens just to close that gap because of that false alarm. If you guys did collect profits today, congratulations. Once again, my videos are strictly for entertainment and educational purposes. I do not ever recommend chasing a stock. Just because Aphria went up 11% today does not mean it's going to continue going up. In fact, it might mean the complete opposite. Invest at your own caution, invest at your own risk. Make sure you do your homework. And if you enjoyed this video, don't forget to leave me a like. If you're not subscribed yet, don't forget to hit that notification bell and smash that subscribe button. Hope you guys enjoyed this video. I'll see you guys next time. Bye-bye.